What's up, guys? Stas here. So the markets didn't do so well today. We had the S&P down 0.1%, Dow down 0.4%, the Nasdaq 100 did go up 0.5%, but the Russell went down almost 2%. So I want to break down the markets today, go over some technicals, and of course, we're also going to be going over stocks to buy now and what stocks I own now. So make sure to hit the like button, subscribe, go down below, get yourself some free money, 2 stocks from WeBull, $10 from M1 Finance, and $10 from Coinbase. There's literally at least $40 waiting right down below for you, and you guys can get into the Strive Smart Discord chat and Facebook group, which both of those are free to join as well. And again, all of those are linked right down below. So let's talk. S&P 500 today ended up going down, but we hit an all-time high. So the uptrend, by the looks of it here on the 10-day chart, is continuing. Look, we hit an all-time high at 39.81, and we ended up pulling back. We ended up going down to 39.55, 39.60, and we ended up swinging into the close, swinging up into the close of the market, which is why I'm saying by the looks of it, the uptrend is continuing, because it is. We hit a higher high today, hence the all-time high, and we ended up pulling back, and we held the previous all-time high at about 39.60. We held that at a higher low today, and we closed above it. So that's a pretty good sign, to me at least, that the bulls are in charge when it comes to the S&P 500, despite it going down. And you can see that even more on the 5-day, 5-minute. Look at how clearly we held 39.55, 39.60, and how we rallied off of that point into the mid 39.70s. And then, yeah, we did see a bit of a sell-off into the close of the market, but overall, we ended up closing above 39.60, which is a good sign. So for tomorrow, what am I looking at when it comes to the S&P 500? I'm looking for this right here, the 5-day, 5-minute little downtrend. You could probably see it on the intraday chart even better, so let me pull that up. You can see this intraday chart downtrend. This is what I'm looking at, right? We hit a high again at 39.81, lower high at 39.76, followed by another one at 39.72. So we're technically on the intraday chart downtrending, but obviously if you pull back on the larger time frames, it tells you the bigger picture, right? But on the intraday chart, we're downtrending. So for short-term direction, we have to see what we're going to do right here. Let me show you. What are we going to do the next time we test this downtrend? Are we going to break out? If so, obviously that's great for the bulls. That means we're pushing for a higher high. We're likely to maybe even go for an all-time high at that point yet again. But if we fail here tomorrow and we collapse under 39.60 and especially 39.50, that means we might be seeing some short-term pain, maybe some selling, profit-taking overall in the S&P 500. That's if 39.50 breaks. We could be going 39.30 after that, 39.15, 3900. Those are the big key levels that I'm watching in the very short term here, the next couple of days, when it comes to the S&P 500. And again, like I said, guys, we were red all across the board, but the Nasdaq 100, the tech-heavy index, ended up doing well. And I know you guys can't see my face, or well, you can see my face, and maybe you don't want to see my face. I don't blame you guys, but you can see, well, you can't see, but I have a tech stocks watch list right here by my face. Facebook, Google, Apple, Amazon, Netflix, Microsoft, all of those stocks literally went up. All of them went up over 1% except for Netflix and Amazon. All of them went up over 1%, and still Amazon went up 0.3% and Netflix went up 0.7%. So strong day all across the board, and that's why the tech-heavy index did well. And you guys can see with today's price action, this is very, very good. Let me just clear this so you guys can see a fresh-looking chart. Look at this. We broke out of the 180 SMA on the hourly chart today. Bravo to the Nasdaq, guys. Nasdaq 100. That is huge. That was actually a point we talked about yesterday and this morning in the morning update video, which is exclusively on Patreon, but I actually uploaded it today to the YouTube channel, so go check that out. It's the upload before this one. We broke out, so that's a very good sign. That was a downtrend point, resistance point I was looking at, and you guys know over the past couple of days, we broke the 50 moving average, and now we broke the 180 today. That's a very good sign for overall reversal for the tech-heavy index here. And you can see it even more on the 4-hour. This is looking even better. The fact that we broke out of both the 50 and the 180 moving averages here. So I like it, but we have a big resistance coming up. That's a big but, guys. This is going to be huge. You can see 13,300. That was resistance in the beginning of March and in the end of February. So that must break. And I think I'm pretty confident if that clears, if 13,300 clears, which, mind you, we struggled at that point today. Look where we got rejected today, 13,300 on the dot pretty much. If we fail, or if we do break out of that, rather, I'm confident we could go 13,550. Those were the highs from back in the end of January, also in the beginning of February. So watch out for these points when it comes to these indexes, the S&P and the Nasdaq, and overall the markets. They're coming back. Although the majority sold off other than tech today. I mean, the markets are still looking pretty good. S&P at an all-time high. Dow is doing well. And the VIX went down today. It cracked under 20 points, which is interesting. So what do you guys think? Let me know down below in the comments. Make sure to hit that like button if you are enjoying this video. Let's run the like button up. Come on, guys. Let's try to get at least 300, 350 likes, 400. How many can we get? Hit that like button. And yeah, let's talk about what I own right now, stocks I'm in. Tesla, TSLA. You guys know Tesla's my biggest holding right now when it comes to my swing account. It didn't do well today, down 4.3%. And that's interesting because we saw tech-oriented plays do well. And Tesla is not just a car company, guys. It is a tech play as well, in my opinion. We could argue that all day. That's not what we're going to talk about today. And this makes sense. Okay, I'm with what happened today because if you guys have been following the channel, this has been, it still is in, an inverse head and shoulder pattern. And I told you all, we will, well, I didn't know we will, but now in hindsight, we did, and I ended up being right. I said we're probably going to consolidate and bounce around 660 and about 700 on Tesla, and we've been doing exactly that, 660, 700, 660, 700, and recently we cracked above 700. We were above 700 today, but clearly we didn't have we just didn't have it in us, the Tesla shareholders or, the buyer sellers. It was a big battle today. The bears won. So the bulls did not have it in them today. And the stock went back down to 660, 670. So we're testing the support here. But as long as we're above the neckline of the inverse head and shoulder, which at this point we are, as long as we hold 660, 670, we are. As long as we're above that, the head and shoulder, the inverse head and shoulder is valid. And I believe ultimately we are going to get back to 740 and 800. Those are the two big targets I have for Tesla, and I'm sticking by that. That's still what I'm thinking, so nothing much has changed there. I'm holding on to Tesla. Tattooed Chef, I'm holding on to this one still. It went down 2.2% today, but overall, the inverse head and shoulder is still intact. My $25 price target is still there, but we just saw a bit of selling, but overall, the uptrend is still intact as well here on the hourly chart, at least if you look at the previous couple of trading days. So Tattooed Chef, I'm in that one still. SLV, also still in that. And I've been in this one for a while. And there's a bunch of other ones, guys. Hold up. Let me pull up my list here on my phone, or on my iPad, rather. This stuff always slips my freaking mind, guys, because, look, it's interesting, when you're talking about all these stocks, I talk to you guys all the time, and I tell you all, when you're looking at stocks all day, you forget some things about certain stocks or what you were looking at before, and here we are. ChargePoint, CHPT. This is one that I'm also still in. It didn't do well today, down 5%, but this is one that I'm looking to add more in. I actually really like this, and I'm saying, hey, bring on the sell-off. I want to buy more. If it gets back to the teens, I mean, that's where I'm looking to add more, but I'm not sure if it will get down there. NEO is one that I'm also still in, guys. You guys know I've been buying that one on the dip. Now it's popped up, and that's the difficult thing. You know, when you buy in on the dip, and I've been buying this whole dip pretty much, averaging down from the 60s to the 50s to the 40s. And when you buy the dip and it pops up out of nowhere, not out of nowhere like I wasn't expecting it. I mean, we were very oversold, but you guys know what I mean. When it just pops up, it's hard to average deeper into it, right? You really have to pinpoint it. And for me with NEO, I said $47 is my price, where if we were to break that, I'm probably going to add into the momentum, as I do think if it does break that, the mid-50s, at least 53 is coming on NEO. So those are my thoughts there on a couple of my positions here in my swing trading account. That is what I'm holding as of now. What are you guys doing? Let me know down below in the comments. I would love to know. And make sure to check out my Patreon. That's linked down below if you guys want real-time buy and sell alerts, call out stocks I'm watching for my swing account, my long-term account. I post a lot of stuff in that Patreon page, and if you guys want more access to me throughout the day, morning update videos, I mean, that is on Patreon, linked right down below. Check it out, and feel free to shoot me an email at stas@stasurfest.com if you have any questions about it, or about anything for that matter. So let's talk about stocks now that I'm watching. There's a lot here, and one that's very slept on, right? It's been brushed under the rug. And yeah, I mean, it's not slept on like nobody's heard of it. I mean, obviously people have heard of this company, but I feel like it's being down a bit too much now, and that is CRM. Ticker symbol CRM, Salesforce.com, right? This is a company that benefited a lot from this crisis, as many companies did that were tech-oriented. And I feel like there's a lot of noise on this 180-day 4-hour chart. You know, if you look at this chart, you're like, this is not a great opportunity. I mean, sure, it could rally back to 240, but the chart looks like crap. You know, it had a big short squeeze. You know, it went to 280. It's pretty much died off since then. It's down. It's in a downtrending channel. So for me, you know, looking at this 4-hour chart, it's not the most attractive, you know. Yeah, this downtrending channel is nice. You know, it could go to 245. That's great. But if you look at this 3-year chart, it kind of erases, or it smooths away the noise, and you can see the bigger picture. And usually the 4-hour chart is a bigger picture chart. But if you look at the 3-year chart, obviously that gives you an even bigger picture, and you have to do this all the time with your different stocks you're analyzing. And look at the 3-year chart on CRM, right? You see the downtrending channel we just saw on the 4-hour chart, and this is huge. We are right by the 50 moving average. This, in my opinion, is a point where CRM could really be bottoming out if this point at 215 holds, which we're literally at right now. So this is a very big moment, in my opinion, for CRM. Excuse me, guys. And anywhere from the low 200s to 210s, I mean, that is a strong support, considering on the 3-year chart, you can see this. Back in 2020, over a year ago, back in February 2020, 200 was resistance, and into June, July of 2020, it was resistance. And this is interesting. Look, CRM dumped in the March crash last year, and it actually did not recover its losses up until July, and then boom, it exploded, and it's been downtrending since then. And is that when they announced that? Yeah, that was when they announced actually, no, that's not when they announced that. I was thinking about the partnership with Slack, but no, never mind. That was a different time. But anyway, CRM, I think it's slept on. Take a look at this 3-year chart, guys. We could be seeing a bounce at 210, 215, right by this 50 moving average here. So I think that is very, very, it's a very good move. It's a very good one to watch, and that's why it's number 1 for today's video. And number 2 is CCIV. CCIV is a SPAC. It's taking Lucid Motors public, right? And we actually covered this yesterday in yesterday's morning video. And you can see it completed its cut pattern, and now we're at a pretty critical spot. Look, so we were at resistance, $33 back in the beginning of March. We sold off a bit, $22. Now we curled all the way back up, hence that cup completing, and we're about to test 33 and that 180 SMA here on the 4 hour. So I think if this breaks, watch out above, guys. I believe this thing could catch steam fast, especially if we get more news around the car. I mean, we saw the test drive that came out on Saturday or Sunday or whatever on the YouTube channel. So if we get more info, clarity, anything new about the SPAC, the valuation, I mean, this is going to be massive for CCIV. And yeah, I believe this could go higher. And 33 is that breakout price where I think, yeah, it could go to $37, $40. I mean, those are some previous resistance points, $42 even. So watch out for CCIV. I like that when it comes to SPAC world. And MU is another one that we called out. I believe it was yesterday on the YouTube channel. So make sure to subscribe, guys, to the YouTube channel if you haven't done that already. And we said, look, it was a head and shoulder, left head, right shoulder right here. And I was telling you guys, one of two things could happen. We either take out the downtrend, which we ended up doing, or we dump off under 85. If we broke 85, that would be the right shoulder going to complete. But the fact that we held 85 today pre-market, in fact, we gapped up today. We gapped up heavily into the high 80s, and we cracked above 90 pre-market. That was just a given. That was an easy sign to read that we were breaking out of this downtrend. And now we're probably going to get even more juice in this move. I really believe we could end up going maybe $95. That is the high here on the 4-hour chart for Micron. So watch out for that, guys. S-Bucks, also known as Starbucks, which I did end up getting. My little inner white girl came out today, guys. I ended up getting a, what did I get today? A white mocha. Oh, no. A white chocolate mocha. That's what it's called. White chocolate mocha, iced. And I ended up getting a cake pop as well. So, gosh, I should not have told you guys that. You're going to judge me now. But I did go to Starbucks today, and the stock did well today. So I guess the unrealized gain that I made in the stock paid for what I had today. So that's nice. And it went up 2%. It broke out of 110, 111. It went up over $2 on the day. And you guys know, I mean, I say this pretty much every time I talk about Starbucks, but we've been talking about Starbucks for months here. I bought into it heavily at $75 to about $80. I was averaging in, and I bought in recently, I believe, when it dipped to the low hundreds. You know, just because I got in the 70s doesn't mean I'm going to stop buying. In fact, I'm just going to average in over time on this one. This is my long-term holding, one of my core long-term holdings, and it broke out today, hit an all-time high at $112.34. I'm very happy about that, and I believe this momentum could continue, maybe to about 115, maybe, big maybe, but it's still kind of overbought here, and it would be very overbought at 115, but still, I think the rally could continue, and if we get a dip and a hold anywhere from 107, 108, I believe that could be a nice dip buy. So there's momentum here, and yeah, it could pull back, which could open up an opportunity for an entry, but either way, it's kind of like a win-win here, because if you're long already, it just hit an all-time high, so you're making money, and if you're looking for an entry point, it's looking good as well, especially if we get that pullback. So, yeah, Starbucks, I love the momentum on this one. Twitter is another one that I'm looking at, TWTR. And Twitter, it actually broke $69, $70 today, which was a very good sign. That was resistance. Or actually, no, it was support back in the middle of February, late February as well. We held $69, $70, and that was also resistance earlier in March, and we finally broke out of it pre-market. Today we got to almost $72. And that's a good sign. I believe overall the next big gap on Twitter to fill is up to $75. That was the high from back in February, pretty much a lot of February. So for tomorrow, you guys can see Twitter ended up closing under $70. We closed at $69.25. So for me, I'm going to set an alert. Let's put it at $70.25. If it could take out 70, get to the mid 70s, right? $70.50, $71, right? That's going to be a good sign, in my opinion, that the uptrend is continuing, and we might be getting that fill up to $75. So there we go, guys. $70.25. I just set that alert on Twitter. I'm excited about this one. I think overall it could actually get to even above 75. 80, 81 is my upper end target. So watch out for Twitter. Airbnb momentarily broke my target today at about 210. You guys can see we momentarily did. We got to about 215. But it ultimately ended up being a fake out. We dumped back under 210. Now we're trading at 200. So I'm looking at this 180 moving average on the 4-hour chart here, anywhere from 193 to 195. I believe that is where Airbnb could be going in the short term. Maybe even the 50 moving average right around 188. That could be a spot it goes to. And if we do get there, that could really be a dip buy. And with the price target of 200 to 210. So I like it here, but I wouldn't rush into Airbnb quite yet at 200. I'd see if it has some more downwards push to the low 190s. And mind you guys, this move, if it does get to the low 190s, it could be very quick. It could literally drop in a little flash crash and then pop right back up. So you have to be very diligent and mindful of that, because you could potentially miss the move, right? So that's Airbnb. Microsoft MSFT is another one I like right now. We're seeing a clear head and shoulder, inverse head and shoulder. It is clear as day. You guys can see that right here. And where would that right shoulder complete? Where would that inverse right shoulder complete, guys? It is going to be anywhere from 245. Let me show you guys this. It's going to be anywhere from $245 to about $250. That's what I'm thinking. So, yeah, watch out for that right shoulder. It's already popping. Today, Microsoft went up 1.2%. So that right shoulder is completing, and there's still some gas left in the tank, I think. About a couple bucks per share left. So watch that for Microsoft. And Apple, last stock of the day, Evercore, an Evercore analyst, put a $175 price target on Apple, and he said, quote unquote, Apple is becoming less a product story and more a services business, which is great. That's what they've been going for, and I'm happy about that as an Apple shareholder, and you guys know that. I mean, look, most people out there have an iPhone. Listen, I have an iPhone, an iPad, a Mac, I have an iWatch. You know, this past year, 2020, I literally bought an iPad. I bought the watch. So everybody's integrated into this. And I bought a laptop too, and I'm actually about to buy a new phone. Fun fact, I have an iPhone 8, guys. This thing is cracked. It's a piece of crap. So I'm about to buy the 12 soon here. So people are in this ecosystem, right? They use music. They're going to use the game service. They're going to use the news service. They're going to use the Apple TV. They're going to watch the movies. People are in this ecosystem. And once you have everybody in this, right? They're comfortable using the ecosystem. All the devices are connected to each other. It's so easy. Apple makes it flawless. Once everybody's in this, they're used to it. They understand it. Why would they leave? Where are they going to go? Are they going to go to Android? Most people are not. They're going to be comfortable with Apple. They're going to stay here. They're going to use their services. And that bill, not the bill, but the amount of money that people are going to be paying over time, it's just going to grow. It's just going to keep on growing, guys. So I love the business model here with Apple. It is fantastic. And the stock went up 1.3% today, and it's under a big resistance at 127. So this, like I said yesterday, I'll say it again today, this must break. And from there, I see a big gap to 137, and clearly that analyst thinks 175 is coming. And granted, that is a longer-term price target. target, but I really think it could get to the mid 130s, 140s in the short term. So, yeah, those are my top stocks, guys. Thoughts on the market. I don't have a list, I promise, guys. Thoughts, and I don't mind if you do. I'm just saying. I said that a little weird right there. But either way, yeah, those are my thoughts on the market, stocks I own right now, stocks I'm watching right now. Make sure to let me know your thoughts down below in the comments. I would love to know. Hit the like button. Make sure to subscribe to the channel. And don't forget to get all your free money down below from Coinbase to WeBull to what's the other one? M1 Finance. Check all those links down below. And if you guys want to check out my Patreon for buy and sell alerts, call outs, all real time, you get real time access to me throughout the day. You also get morning update videos and just a lot of stuff on Patreon. Check that out. That is also linked down below. I'll catch you all in the next video. Thanks for watching as always. Take it easy, guys. Keep crushing the markets. Stay safe out there. Peace out.